a very easy level to mark out. I'm using the Fibonacci retracement tool to look for psychological levels of resistance or mathematical levels of support and resistance. And consistently, what I'm seeing is that the 38 fib level is a consistent level of support. Hello, everybody. My name is Drew Demon, and I am the Devil's Stockbroker. In this video, I'm going to be covering TRKA. This is Troika Media, one of our personal favorites on the market this year. So, Troika Media has been basically ripping to the upside non-stop, and I'm sure a lot of people are really excited. I wanted to give a quick analysis of the situation and let everybody know what to expect for the next couple of weeks going forward and postulate a few possible scenarios for where we may be going next. So, looking at the gap that I called out about 4 days ago, I think I drew this on Thursday last week. It would appear that we have more than filled this gap, and now Troika has set itself up at the upper range of this trading range here at approximately a high of 80 cents even. So very beautiful there. So now that that gap has been filled, we no longer need this. Looking at the daily chart, we see that there is a lot of resistance here in this trading range. So I'm going to be highlighting this range here as a result, but it's important to note that the majority of this was very small volume. Note that the entire time that Troika had been trading in this area, in total, there was about 61 million shares traded in this trading range. And just in this single candle from today, we have traded about 125 million. So we can, oh, I'm sorry, today was 351 million. I was off by one there. So as you can see, Troika has pretty much crushed the volume that was previously traded in its stock. And right now it has set up much higher. Now, I want to give full disclosure that I did close some of my position. I am doing that just to ensure that I take profit and that the trade has become riskless for me. Essentially, what I have done is I have closed the position that would constitute my full cost basis. So, in the interest of full disclosure, I have basically turned this trade into a zero risk trade for myself because I closed enough of my position to fully cover the expense that it took me to take the position and a little profit on top of that. So, I'm still holding on to a significant position of Troika Media right now, and I intend to just let it ride to see what happens. Let's go jump down to the 15-minute chart and analyze things just a little bit closer. So, on the chart, currently what you can see is that Troika has been continuing to move in this stair-stepping pattern with this exponential growth curve. So, you'll notice that I had marked various levels of support going all the way back to the floor at approximately 10 cents. And we have set up repeating levels of support ever since then. Here, here, and now here. So now that our support is pretty solid below us at 50 cents, we're looking for the next area where we expect Troika to set up additional support. So far, what we've seen is that we are kind of setting up this initial high mark here where we have run into a little bit of resistance today. Now, since that resistance is a little over 80 cents, that gives us a new breakout level. Now what we're looking for is to see where we're going to bounce off of support if we start retracing. So we can do a couple of things to kind of measure this out and give ourselves an idea, but what I like to do is I like to go from the last level of support and then draw up to the last resistance that it ran into previously and then find what point it bounced off of. So if I just go ahead and wipe a few of these lines out here and redraw some of this to make it a little easier to spot. I know my charts are very dirty, so apologize for that. But we will it's fixed. No, All right, so a very easy level to mark out. I'm using the Fibonacci retracement tool to look for psychological levels of resistance or mathematical levels of support and resistance. And consistently, what I'm seeing is that the 38 fib level is a consistent level of support. So that was based off of the previous move. Let's go ahead and do the same thing with the last move. We go from one support to the next resistance, and we see that the 50% level acted as support the time before that. So at the very least, we can say that the 38 level should be our next safe level of support, with the 50 level being very strong support below that. So let's go ahead and see what price level that puts us at. We go ahead and mark these out. Okay, so first expected level of support should be 68 cents or 68 and a half cents. And then a support level below that would be around 65 cents. We'll go ahead and round it up. Okay, so now we can get rid of the fib retracement tool. We have a few levels of support to watch for. I go ahead and get rid of this line too because we don't want to get ourselves confused. But these look like very good levels of support. So now what I am waiting on is for basically a retracement, honestly. Troika moved up pretty fantastically since it is Monday. The market was up today. I'm expecting for the market to make some moves to the downside here in the near term. I'll be covering that in a separate video. But after this big 50% move, I anticipate that Troika needs to retrace at least a little bit and go back and find some support. It's not a certainty, but this is the way that stocks tend to behave when they have moved up by this much. It gets pretty volatile and crazy with short squeezes, though, so this isn't guaranteed. For all we know, it may shoot up another 50% tomorrow. We can't really be sure. But I'm just kind of going with what my risk tolerance is personally, and that's what everybody else watching should be doing for themselves. You decide what you're going to do based on your own risk tolerance and risk management strategy. The important thing is that you're always managing risk, just like I did by closing a portion of my position to lock in profit and make sure that I was not going to lose anything no matter what happens to this trade. No matter what, I am going to be closing my whatever happens with Troika, I'm now guaranteed profit because of my risk management strategy. So now that we're here, I can look for opportunities to average down on my position. So if we do end up getting that retrace to the 38 level, I can take a buy here, or drops down to that 50 fib level, I can take a buy down here. And it wouldn't cause me any stress whatsoever if that went against me because I've already locked in a really decently sized profit and I have an opportunity to average down for the next leg up. So, that being said, let's go ahead and observe where the possibilities lie for the future. If we consider the parabolic move that this is making right now, it's really, really easy to suggest that it could just keep going up from here. But I am looking at several areas of resistance that might mark out maximum levels. One other thing that we observed in the trading floor was when we turned on our harmonic patterns analysis tool. This is actually an indicator built into TradingView. When you look at Troika on the daily chart, as it turns out, there is a harmonic butterfly pattern that has appeared in the chart, and it actually marked the low point on the stock's 52-week low. So if you had taken an entry right there as soon as this pattern appeared, you would have been trading at around 10 to 11 cents, and a bid there would have netted you, assuming that you didn't close at any of your position even after today. You would currently be up by around 580 to 590%. So that's quite a gain. Nevertheless, we didn't see it then, but I was just observing this, and while it's not useful for us for getting into the position early, it can be useful for determining where the max levels are for Troika. Now, these are different target levels based on mathematical targets that are created with harmonic patterns. If you're a new trader and you've never heard of harmonic patterns, Don't sweat it too much. It's kind of an advanced concept with technical trading, and they're very difficult to spot. The purpose of them, though, is to kind of identify counter trend trades. It is a technical pattern, so you're looking for counter trend trades with this particular type of pattern. So a butterfly pattern like this usually creates a rebound from the low side, and it will target one of four possible targets to the upside before it hits resistance, and then it needs to go through consolidation or even retracement. The most likely target to hit is the first target, which would have been 32.9 cents. The second target was up at 56 cents. The third target, which we have yet to reach, is marked at $1.05. And then beyond that, target number 4 is up at $1.99 plus some change there. So this is an extremely lofty target. I don't want people to look at this and then say that this is definitely going to happen because it's not certain. There's no way you can be certain of it. But the level 3 target, which is $1.05, is a possible target to hit. That would actually be the very next level of resistance, which actually places us right here at the top of this wick that we traded at on the 19th of July, 2022. The very next resistance beyond that would take us all the way back to the top of Troika's trading range for the duration of 2022, going all the way back to November 2021, actually. So this is a very lofty target. What we should have our eyes on right now is a buck 5 cents. That's actually very attainable, I think, especially once we go looking at the short interest, which I'll go ahead and take you to right now. So, in review of the short interest with Troika, let me go ahead and refresh this page so that we get a brand new look at the charts. We are currently sitting at 97% of the free float. So that's the current short interest according to Ortex. And we have compared in the past the exchange reported short interest to the reported estimate by Ortex. And as of the last exchange report, that showed it at 43.18%, or Texas estimate came in at 43.43%. So very tight margin of error, less than half a percentage point. Very, very good, and it's very accurate. So we can at least be somewhat confident that these numbers are close, at least the closest that we're ever going to get to real time. In addition, we see that the security lending volume for the last several weeks has been moving in this parabolic curve. Now, keep in mind, these numbers are only up to date as of Friday. We haven't gotten the new trading day, and we're not going to get that until probably about 8 p.m. Eastern Standard Time. So we're about an hour and 15 minutes away from the next candlestick appearing on text. But the most encouraging things that I see here is that utilization is still maxed out at 98%. The short interest estimate is still extremely high, almost 100%. The fact that it's gone down into it back to double digits after reaching 3 digits doesn't really concern me. This is still absolutely astronomical short interest, the likes that we have not seen in a long time, like not since GameStop AMC levels of ridiculousness back in 2020 and 2021. The short, or not, excuse me, not the short interest, but the on loan, the percentage of the free float that is on loan is still at 142.8%. This is the same figure from Friday when we closed the market on Friday. So these numbers have not changed. This is the number that I said we need to pay attention to. The fact that the free float on loan is still in the triple digits is very alarming and should suggest to us that institutions are still borrowing the stock in greater numbers than what should be legal. At the very least, this confirms that a significant portion of the float has been rehypothecated, or shares that are not typically available to the public may be being traded by insiders, or rather, not insiders, but the the group of investment firms that are permitted to sell short portions of their the E series preferred stock is what I'm thinking of. So it was speculated that the E series shareholders did have the ability to shell, sell their shares short. Excuse me. Um, and I think that that's actually a really sound theory because we saw this same activity happening in Mullen when firms like Isuza, Alt Global Holdings, and Digital Power were also given the ability to sell stock short in Mullen when they knew that a dilution or some other event like that was going to be coming. So there could be a degree of insider trading happening here that may not necessarily be on the up and up. That is the reason for this extremely high short interest and would explain why the numbers have exceeded 100% of the float. But regardless, the fact that the short interest is so high is what we're paying the most attention to. And the fact that institutions are borrowing even greater than the float and holding those shares of stock on loan. The days to cover is still only at 1.0, which I wouldn't really be too worried about because days to cover is highly dependent on volume, and we've been trading with record high volume for weeks at this point. So the days to cover are probably going to stay very, very low for the foreseeable future. It's not a reliable indicator to indicate a short squeeze. We're in the squeeze phase now. So it's a matter of how much pain the shorts are going to go through before they come to their own individual conclusions about whether or not to cover. The other thing to take note of is that we've now been on the threshold list for 5 days. So we are confirmed on the threshold list for 5 days. We have to wait until the end of today to see if we are still on the threshold list. After it usually comes at around 8:30 p.m. Eastern Standard Time. That's usually when the threshold list updates. So you'll have to check for that later. Cost to borrow is still averaging extremely high, but take note that the minimum has dropped significantly. So expect that institutions and market makers are not really getting hit as hard by cost to borrow fees. So that takes us through the short interest numbers. One other thing that I do want to actually point out is this additional factor here. So this blue line on the chart is the average days on loan. And typically what you see is as short interest rises, average days on loan will typically drop. And the reason why this happens is because that's new positions being opened by new short sellers. So when you see the on loan days average going up with short interest increasing, that typically means that short sellers are now selling shares of stock short that have already been borrowed for some period of time. And this was the case when we were going through like the first half of February, the last half of January, as short interest was climbing, the average days on loan were still going up. So these shares had already been borrowed for this duration of time while short interest was going up. If I go to the on loan, you'll notice that it kind of led a little bit. The red line shows that the shares on loan increased pretty significantly before the short interest did, but they more or less followed the same curve. And this is because institutions like to hold an inventory of shares that are available. And to do that, sometimes they borrow from other institutions. So that can account for a lot of the borrowing activity. And you'll notice that the on loan shares follows the upper boundary of the confidence interval for the short interest metric. So that's an interesting thing to take note of. Now, we have had a big drop in the shares on loan, very big drop on the shares on loan. What's interesting, though, is that the average days on loan went up. So, what does that mean? When you see the shares on loan going down, but you're seeing the average days on loan going up, that actually indicates that recent short sellers who open their positions within a few days of now are now closing their positions because when you when you take away the smallest number from an average figure, it actually causes the average to go up. So since the most recent shorts are likely closing their positions right now, that means that they are putting additional pain on short sellers who have been holding their positions for the long term, or at the very least, it is causing pain for borrowers that have held their shares on loan for a significant period of time. So now we're starting to see the recent short sellers get very, very, very nervous, or maybe they've had enough and they have experienced enough pain that it's time they've decided to get out. I'm really interested to see what these numbers look like tomorrow morning because I suspect that what we're going to see is the average days on loan continuing to move to the upside as the free float on loan decreases. And if that is the case, then that would suggest to me that the old hat short sellers who have been holding their positions since like 20 cents or possibly even lower are going through a lot of pain right now. Right now, nothing is certain, but Troika is looking really, really good. I've got to be honest with you. I'm pretty outstanding. I'm pretty excited for what's coming next. So I don't want people to take my partial closing of my position as a bearish signal. It's just me managing my risk, okay? And it's a rule I have with myself. No matter how good a play is, I always take my profit to make sure that I am taking out my cost basis. And that's just a way to make sure I'm always winning no matter what. I keep my losses small and I make sure I keep my wins big. And when my wins are very, very big and I want to stay in the play, it is my rule to take some profit off the table so that I have locked in the cost of my trade. And that makes the trade riskless for me. Anything that happens after that is just icing on the cake. So I'm really looking forward to seeing where Troika goes on Tuesday morning. But for right now, this is all I've got for you guys. Thank you guys so much for watching, and I'm looking forward to seeing you in the next one. Until then, have a hell of a time in the markets. Thank you guys so much for tuning in to watch this video. If you enjoyed the content and you found this information helpful to you in your own trading strategies, be sure to leave a like on the video. It helps out the YouTube algorithm and helps us reach out to others who need this information too. Be sure to subscribe if you want to see more. And if you're not a member of Hell's Trading Floor already, consider joining our Discord by joining us at hellstradingfloor.com, which will allow you to sign up for our Discord at discord.gg/hellstradingfloor. Thank you guys so much for watching, and I look forward to seeing you in the next one. Until then, have a hell of a time in the markets.